Okay, this is a chart that was taken out from last Friday, okay, as of 14th February. So please ignore this part because until last Friday, the market low was only at 12,135, okay, which is 12,135. But yesterday, market actually did another new low. Yesterday, there was a new low at 11,610, okay, 11610. So we are not able to put in the update. We are not able to put in the updated chart. But those people who have got a lot of interest to understand. Yeah, okay, my apology. The chart was taken from 14 March, not 14 February, which was updated on last Friday. Okay, but anyway, those audience who have got a lot of interest to know where will be the next forecast, you are able to put out a pen and paper now. As I go along with the prices, you can jot it down and follow with my prices, which I believe over the next 1 month you will see all this market formation being realized. Okay, let's do a simple wave count, whereby this wave coming down is a wave A, this is a wave B at 17,605. Then wave C, actually there was a new low on yesterday, which the market went down to 11,610. Okay, and today the market closed at 11,890, 11,890. And one thing to be a little bit more specific, these are all cash chart prices. Okay, so based on my forecast assumption, if the market were to drop down from this point, 17,605, until the low at 11,610 yesterday, okay, if we were to take a 1/3 correction, which is 33%, Fibonacci is about 38.2%, okay, on the average, we are expecting the market to bounce up back to 13,600, which is somewhere around this, okay, over the next 3 to 4 weeks. This is a natural market phenomenon and a normal market behavior. And I have come across many people who ask me, why does the market behave like that? And to be honest, I told them, just understand the market behavior. There's no such thing as why. Because when the market comes down over quite a period of time, it will start to rebound. Okay, this is the market behavior. But the important thing we need to know where the market will head up to is the target that we need to identify. So based on this weekly chart, this is the weekly chart, okay, taking 1/3 from the bottom, which is 11,610, yesterday day low, we are expecting the market to move back up to 13,600. Okay, if the market were to be a bit more fierce and correct up to 50%, which is a little bit higher than 13,600, then we will be expecting the market to reach the region of 14,600, which is around here. But personally, I think this is a little bit quite remote and unlikely to happen. Okay, but going back up to 13,600 is something which is more feasible and more likely is what we're going to see within 1 month's time. And in fact, another important thing for the market to bounce up is the rate decision by US Fed tonight. Okay, tonight there'll be a rate announcement, and the market widely expects a rate cut anywhere from 0.5% to 0.75%. And if this is going to be reinforced tonight, I think the whole Asian market will start to rebound and do a small recovery over the next 1 month temporarily. Okay, let us take a look at the day chart from the weekly chart. Okay, this is a zoom in from the weekly chart that we have seen just now into a daily chart, whereby we are at the same point A and this point B at 17,605. Okay, as I said, the chart was taken out of last Friday. Sorry, there's a typo error here. It's 14 February. So if the market were to reach a low of 11,610 yesterday, okay, taking this last wave from this top to this bottom at 11,610, if the market were to turn up for the correction, okay, a 50% correction will lead the market back into the region of 13,600 for this internal wave. Okay, from here coming down to yesterday low. Okay, a 50% correction. And this correction target is actually in line with what we have seen just now on the weekly chart. If you were to take it as a 1/3 correction from the point B right to the bottom here. So which means regardless if the market were to go higher in order to reach 14,600, okay, we are first looking at a more likely target to be hit here at 13,600. Okay, target is anywhere between 4 to 6 weeks. Okay, and from the power wave count, if the market were to realize and bounce up from this low to 13,600 in another 4 to 6 weeks, okay, what the market is going to do is it will start to form a small channel at the top. Okay, if the market were to go higher and break this top, okay, the head, if it breaks higher than this head, which is 14,150, then we will be looking for the market to retrace high up back to 14,600. But in any case, at this target of 13,600, okay, if the market can keep this head intact, that means not tested. Once the market starts to turn down, it will start to head down back to the first target at 11,000, which will serve as a double bottom to yesterday's day low. Okay, from our power wave projection, if the market were to turn down and breaks 11,000, okay, 11,000 will be the double bottom. But if this double bottom were to be broken, our ultimate target for the whole wave to complete right at the bottom will be anywhere from 8,500 to 9,000, which will probably last until end of this year. Okay, so if you were to trade on this forecast and projection, it is very important to understand how to reinforce your risk management, which means if you were to start shorting around 13,600 when the market comes up here, okay, you should not keep your short positions anymore once the market breaks above this top, 14,1/2. But if the market were to come down, that is where you can find your center clause. And on the next target at 11,000, if it breaks, then we are on a south trend going down to 8,500 or 9,000. All this will realize most probably within another 6 months' time to complete the whole wave.